Our next panel is insurance claims. Please. You going to use this podium? Yeah. Okay. Our next panel is insurance claims, warranties, and coverage pitfalls. I would like to introduce Laura Knoll, if I can find her notes here. Here we go. And Laura is a shareholder who joined Ali Maass in Palm Beach in 2018. Primary focus on yacht transactions. She represents clients who are buying and selling and chartering yachts and advises on other related matters. She is a graduate of the United States Merchant Marine Academy and got her law degree from Tulane University. Laura, all yours.
Hi, everyone. Bob, did you tell me how much time I have here? I'm going to do my 30 minutes? Okay. Okay, thank you very much. I realize that this is the last presentation of the day. I'm going to very briefly introduce our panelists and then move right into our questions about marine insurance. So on the panel today, we have Tom Gresh, president at NFP. Yeah, thank you very much. I didn't want to mix that up. Caycie Flitman, partner at Moore & Co., and Nick Zeher, partner at Robert Allen Law. So marine insurance is super cool, super fun for maritime law nerds. The oldest marine insurance contract dates back to Genoa in 1347, which is before the printing press, Columbus, the United States. So it's a really, really old form of law. There are terms in maritime law and marine insurance in particular that sound like they belong in like a fantasy novel. Jettison of cargo, Michael Livery, right? Letters of marque, jettison, general average, law of salvage. But marine insurance in particular is very special because it covers things both big and small. A $500 million container ship to a jet ski in Biscayne Bay. We're going to start the panel presentation today by talking about the most recent U.S. maritime law Supreme Court case, which involved a marine insurance contract signed in Germany for a yacht that was primarily based in Pennsylvania that ran aground in Florida and was governed by New York law. And so Nick Zeher from Robert Allen Law, can you please tell us about that case and why it's important?
So that case isn't really actually about insurance. It's about contract interpretation. And we heard earlier about IP and ChatGPT, and a case like this is what gets the ChatGPT lawyers in trouble. So, like Laura said, multiple jurisdictions, what law applies. To understand why this case is important, you got to understand the facts leading up to the situation. So, logic, right? If you have a boat in Florida, Florida owner, insurance company comes to Florida, they sell the insurance contract in Florida, logic would tell you Florida law would govern. This case challenged that situation. So the contract had a New York law provision. And when it went all the way up to the Supreme Court said that the choice of law provision in the contract is enforceable. So the case itself is not about insurance, but the outcome of the case makes or has an effect on insurance. Because in the choice of law with New York is totally different on how it's applied compared to Florida. In Florida, if you have a loss, the contract's governed by Florida law. The insurance company's denial or way to deny the coverage has to be related to the loss, right? So the reason for denial has to relate to the loss. For example, if the boat, you got corrosion on your bilge pumps and the bilge pumps aren't working, one of these fronts comes through in May and we get 12 inches of rain, the boat sinks. Under Florida law, the insurance company can deny coverage due to the corrosion because that's what led to the loss. However, you go to New York and there's a few insurance companies that have New York choice of law. Concept Special Risks is one of them. You got Pure, AIG, Chubb. Those usually have the choice of law wherever the insured lives. So a concept policy, if in the same situation, rain comes, the boat sinks, the first thing that concept does when they come to the boat is they check your fire extinguishers. And if your fire extinguishers are out of date, they could care less what happened, why the boat sank, anything like that, they're denying coverage. And that's because New York law requires strict compliance to the insurance contract. So what Laura said, these crazy old terms, it's uber me fidei, is the utmost honesty or the utmost
Good faith.
good faith to the insurance company, meaning the insurance company doesn't have the ability to constantly look at your boat. You get a survey when you get the insurance policy, so it's the insured's job to make sure the boat stays in the condition at the time of the survey. And when a situation like this arises, the insurance company under New York law, which is what this case is allowing these insurance companies to sell a policy in Florida but be governed by New York law, it allows the insurance company to come in and deny coverage because your fire extinguishers are expired, even though the boat sank because your bilge pump. So that's what this case allows. So why does it matter as yacht brokers? Yacht brokers are now getting involved in assisting their buyers in getting insurance. So in a situation like this, the client, the owner of the boat, the insured, is not aware of this. They're not aware of the consequences of a New York law applying to the insurance policy. So, the yacht broker needs to make sure they get in touch with the right insurance broker, which is what Tom does, to make sure the client knows exactly what they're getting when they get their insurance.
Okay, and it's interesting because every state has its own law for insurance, and generally speaking, maritime law will be uniform, but in particular, if there's no rule of uniformity for maritime law, we generally look to state law. So that's why state law is generally applying to these marine insurance contracts. So New York is on one end of the spectrum, Nick, saying strict compliance with the policy terms, all the fire extinguishers, yada, yada. And Florida is requiring a causal relationship to the loss to deny the coverage. And interestingly, the UK used to be like New York. And English law required the strict compliance. 10 years ago, the UK changed their law under the Marine Insurance Act of 2015, and they got not quite all the way to Florida, requiring the causal relationship, but they got in the middle, where now, under UK law, English law, they've softened so that if there's a breach of the policy, say the fire extinguisher for the sinking, right, the policy is suspended and the insured gets the fighting chance to prove that the breach, the fire extinguisher, didn't increase the risk that occurred, the loss that occurred. So it gives the insured, kind of a fighting chance, but it's not quite the same. So when you're getting policies from your broker like Tom and you're advising the owner, usually the owner's only looking at what? The premium.
Yeah.
But this particular clause could determine whether or not that policy is worth the paper that it's written on. So Tom, and following into that too for Caycie later, should owners be shopping insurance policies based on the choice of law that governs the policy?
Start on that. They may not always have the options, but often they will. So Nick mentioned Concept, right? And there's some other UK, they're based in the UK MGAs that offer these insurance policies. Generally, they're for the value of $5 million and under. Generally, it's because the blue chip companies like AIG, Pure, Chubb, the names you know, do not want to write that risk. Maybe it's an absentee owner, the guy had claims, he can't get insurance anywhere else, and then they're looking to an offshore company to place that risk. Probably the only way they're going to get insurance. So that person probably doesn't have the option to venue shop or even consider what that venue is. Where the client has that option probably in the mid to larger yachts, right? Where we're getting the blue chip companies, like I mentioned, AIG, Pure, not to pick anyone out, Travelers. They have the options to consider options, especially when Lloyd's is in place, because Lloyd's is going to be based on English law. So generally, the larger yachts over $5 million, the quality yachts, they certainly will have an option, and premium does a factor, right? And some people just say, "Hey, I want the cheapest," and even it might be a couple $1,000s less, 10% less. But they don't really understand what selection they're making. They don't understand that they're taking on a financial exposure. They're taking on English law outside of U.S. jurisdiction, right? Maybe it's not explained to them. But generally, on the smaller boats, not an option. And larger boats, certainly an option to consider and be on the look for.
And under the UK, so Laura mentioned, what the UK law changed. So we heard about the denial, and in the US, it's denial. You either have coverage or you don't. Under the UK law, in a situation where the policy is being challenged, the insurer is only entitled to collect what additional premium they would have charged had they been known the risk. So if in a situation where the coverage is being challenged, if the judge or the arbitration finds there is coverage or it should be covered, the insurance company is entitled to collect just what the additional premium that they would have charged had they known of the risk. Now, I'm not a UK lawyer. There's some running around here. Check with them. But that's what our understanding of the UK interpretation. So it's pretty favorable to the insured.
Caycie, can you tell us about English law too, and just the structure of those policies, especially as we get into the higher value, which is what you deal with?
So it's really important when you have a US UBO who might not be familiar with the fact that they have an English law policy, that they understand the policy structure and that it works differently than a US-based policy. So for example, US-based policies, the insurance company, one, there's a duty to defend, and then two, if there is in fact a claim, the insurance company pays it directly. But with these London-based policies, you generally don't have a duty to defend, which means that they'll have to hire their own lawyer, pay their own cost. But then if there is a payout, that the insured, in fact, has to pay the liability first, so they'll have to pay the $1 million, then they'll have to seek reimbursement from the insurance company. That can come as a shock to a lot of people.
So basically, you're telling me, Caycie, for every English law policy, the owner has to come out of pocket for the loss and then pursue the insurer.
Yes.
Yeah.
Most often.
Versus the Chubb policy, Tom.
Chubb US-based policies.
Thank you.
Let's not favor anyone. They're great.
But they pay first.
They pay first, so they're
In
more
other words-
considered first-party pay versus indemnity, right? It's not a problem, right? Most of the world works on indemnity insurance. That's what most of the world works on. But in the U.S., we're not familiar with that indemnity process. So if the owner is not aware of this process in the beginning when he's selecting his insurance and he has a claim, he's going to be very surprised, right, that he has some financial exposure. He has to be out of pocket to pay his claim and get reimbursed. Now, there are factors where the insurance company and large claims can help them catch up on those, but it is 100% indemnity policy, and it is just something that is very foreign to U.S. people.
So we would say then the delivery to you guys today is that there, other than premium, you should be looking at the insurance policy choice of law and the kind of policy that it is. Does the insurer pay first or does the insured pay first in the event of a loss? Tom, could you give us one example of another reason that U.S. owners in particular might like insurer pays first policies?
Yeah, we talked about that. So I can give you an example that's pretty clear on it. Like I said, most people just don't understand it. There could be a premium difference. Usually it could be slight, it could be significant. And then, if it's a significant difference in premium between indemnity and a first-party pay, then there's a decision to make. A good example is a client that had his yacht in Europe, and he was hauled out of the yard, and he had overspray all over the yacht. It was a large yacht. So it was with a U.S. carrier, and we negotiated with them up front, right? We got the invoices, negotiated cut lines in areas that needed to be repainted on the boat, and the insurance company cut him a check for $12 million, right? They didn't say, do the work. They said, here's a check, go do the work. He could continue using his boat for the season or forever long. On the indemnity side, they're going to say, okay, go get your boat painted, right? And send us the invoice. Now, like I said, there could be some catch-up during that process, not that he's extended $12 million, but they're going to say, go get the boat painted, and then we'll pay you after the boat is painted. So there's a big difference. And that client, it was a large yacht, he paid a substantially more in premium by choice because he wanted to be with that U.S. carrier for these situations, and it worked for him at that time. So.
Great, okay. We're going to move to one other topic, which you also have to be aware of, which is shipyard indemnity contracts. This is for refit work, maybe even for warranty work. What we're seeing now is that European shipyards want the owner to indemnify them for losses from $1. So that's like you taking your car to the mechanic and your insurance being responsible for anything that happens while it's at the body shop. Who here thinks that's reasonable? $1. Crazy. You should all have your hands up. Everybody's really hungry. So, Caycie, can you just tell us why that might actually be necessary in some cases?
Well, I think one of the issues that we're seeing is that with the shipyard contracts, what they're doing is they're actually shifting the risk of loss to the owner. So rather than having their own insurance policy cover any damage that they may cause to the vessel, the owner's insurance policy has to cover the loss. Typically that would be fine, right? But for the fact that the owner's insurance policy, based on the rest of the language in the shipyard contracts, is precluded from then seeking recovery from the negligent party of the shipyard because you have hold harmless language, limitation of liability language, and waiver of subrogation. So that inevitably creates a conflict between shipyard policy and then the owner's insurance. So then it essentially leaves the owner naked, right? In the event that there is a claim, the owner's going to end up having to pay out of pocket because then the insurance company isn't going to pay it out because of that conflict. So when the vessel goes into the yard, you want to make sure that you have the insurance company review the contracts, approve the contract, and sign off on the contracts. It's also important to have a lawyer review it because typically the first draft of it is going to be very yard friendly. So when we come in, we obviously make the markups and the revisions to get it to where it needs to be.
Tom, can you explain to us what you see as a more typical shipyard threshold for their own coverage?
So typically, it just depends on the yacht. So it depends also on the size of the yacht. Typically, the problem is the yards will give the captain a contract where they say, we hold no liability at all. We're not responsible for anything. Here we go, captain, sign it. Now, this subject has been talked about. There's a lot of people that do the right thing, but there's still a lot of people that don't. The remedy now is fairly simple. Many years ago, it was difficult. We had to argue with everyone, argue with the yard, argue with the insurance company, maybe get a different insurance policy just while the boat was in the yard. But the process is pretty agreeable now by all sides, right? The yard generally will give $5 million or whatever is required very easily. They're going to just charge the client a couple bucks, a couple dollars of premium for that. And then now the insurance companies are also more agreeable, understanding the process, right? So the yard accepts some liability, and now we go to the insurance company and say, insurance company, the yard is going to accept $5 million on this $20 million boat, and can they sign this contract with all this harmful language in there? And they say, yes, you can sign it. Okay. The problem is that they don't give it in the beginning. You have to ask for it.
So what if the captain has gone to this yard for the last 20 years and he's never looked twice at the contract, and it turns out that the contract's already been signed? Is there anything that we can do about that, Tom?
Sure, you can get an addendum on the contract. So that happens a lot. A captain will call and say, hey, I need a copy of the yacht insurance policy. I'm like, okay, what do you need it for? Well, I'm in the boatyard. Okay, what's going on? Well, I've been here for 2-3 weeks. We're getting work done. I'm like, okay. Did you sign a contract? Yeah. Can you send it to me? Yeah. And it says all that harmful language and all these things. I'm saying, okay, please, captain, you got to come to me. Oh, I forgot. Or I've never had to do that before. What are you talking about? So there's some really good captains out there that have never done this before, right? They've never been asked. So we have to go back to the company. We backdate it and get everyone to agree. The process is simple. It's just the captains. Generally on the larger yachts, we have yacht managers involved, so it's not as frequently we don't see it. But probably at like under 50 meters is where we start seeing the problems.
Mm-hmm. And also, Tom, I'd like you to talk a little bit about when you've been surprised by hold harmless, waivers of indemnity and subrogation in construction contracts. Sneaky.
Yeah, really good point. So this is fairly recently with a European yard, and I've seen it twice now, where the yacht went back to the Mediterranean yard to get warranty work done, right? You would think, no problem. Well, the yard gives them a contract to sign. It says, hold us harmless, waive all your rights. We're not responsible for anything. So pretty much if they're hauling the boat, they drop the boat, we're not responsible for anything, right? So we go back and say, hey, can we get the $5 million, whatever that limit was? And they say no. And I go back, Captain, yacht manager, you have to get something. They have to give you something. They can't just say, no, it's warranty work. You just build a boat with them. And after, maybe a week or so back and forth, we found out that the yard input into the contract language that says for any warranty work, we're not responsible, you hold us harmless for everything. And that manufacturer stood by that, made it very challenging where we had to go get a separate policy that was very expensive that the owner had to pay for. So that's been twice where it's been in the new build contracts, that language for warranty work.
That's really sneaky because usually when the owner is signing the construction contract, they don't even have an insurance company to send the contract to for review because they don't own the boat yet. And so there's no way to get approval. And so if you don't have somebody watching out for these things, that's really tricky. That's really tricky.
So brokers, that means when your client's going to go to the shipyard, they're going to build a boat. I know time kills deals, right? And you got the buyer ready to go, the shipyard's ready to go. If it's really expensive boat, it's worth the time to allow a lawyer to look at it. Send it to, most of these buyers have in-house counsel, even if they don't want to hire specific maritime attorneys, they have in-house lawyers. Take a look at it. They have insurance brokers that insure most of their lives. Spend the extra 2, 3, 4 days. Make sure the owner is aware of this. Read the contract. If it looks funny, there's probably something wrong with it.
Okay, so the key takeaways from our panel are to know what kind of policy you have, whether it's an indemnity policy or the insurer pays first policy. Don't just look at the premium, look at the governing law also, and always get your shipyard contracts reviewed in advance. And please, please, please keep good records. So thank you, everyone.